We've looked at the regulatory environment, which changes around the world, around the states, let alone around the world. We've got a very particular kind of regulatory environment in the UK and the US. The UK is supposed to follow a kind of European regime, but sometimes goes its own way. Now let's look at what the numbers are really telling us. Yeah. Okay, Richard, I want to start off with you. Now, you're probably one of the preeminent academics in the field. Certainly look at the big global space. You were just doing a section in there about the Asian opportunity. Is all the excitement happening in the US, or should people be looking elsewhere?
Oh, absolutely not. One data point, looking at the peer lending market in China. In September, they did 3.87 billion.
3.8 billion in September.
In China, with an average growth rate this year of 8.5% a month. So it's an extremely large and interesting opportunity people are not paying attention to. Mm-hmm. Frankly, I don't have a lot of optimism. I'm rather bearish on the US market right now from the equity side. From the peer lending side, obviously it's doing very well. But I think you need to look at Asia, and you also need to pay some attention to developing economies. MENA has about 30 crowdfunding and equity platforms launching. Most people are not aware that it's happening there. It's Sharia compliant. So I'd pay attention for equities in the Middle East, and I would pay attention for debt in Asia.
Right, okay. And just on that Asian thing, I mean, that's an extraordinary number you just mentioned there. Is it peer-to-peer loans? What is it? I mean, what is it? I mean, or are these shadow banks?
It's a combination of traditional financing mechanisms that happen to throw up a website, as well as very well organized and backed peer lending platforms that have been financed by some of the larger tech companies in China. And also several of the licensed and official banks in the last 2 months have started launching peer lending platforms. So there's both a very strong gray market, quasi-criminal aspect, as well as a very traditional institutional aspect, and it's both.
I love the quasi-criminal aspect. Alex, just talking about you look at particular data for crowdfunding equity, and we're doing a crowdfunding equity lunch at 1 o'clock to get a better sense of the sector. Do you think we're seeing explosive growth in the crowdfunding equity sector in the US in the next year? You're obviously looking at the trends at the moment.
Well, obviously, Title III has to pass. So
yes.
Once that happens, I think we are going to see an explosive growth. At the same time, I think secondary markets, introducing liquidity or some way of entering in and out, I think is going to make a big difference, because I think a lot of people are going to jump in, particularly non-institutional investors, and are going to find that while it's exciting to get in, not having a way out is going to be an issue.
And do you think that we're going to, at the moment, I think it's fair to say in crowdfunding equity, there's very little institutional money being put to work at the moment, for obvious reasons. Do we think that with the rise of secondary markets, which may not be as easy as we all think it is, based on our last panel, but do we think that that's likely to see an inflow of institutional money if there's a secondary market? I suppose it might depend on whether some of the crowdfunding equity propositions actually make a profit, I suppose.
Well, it's hard to judge. I think the institutional money is already there, and I think that they have a much better understanding of what happens when they get in, and how to get out. I think the opportunity to open the markets to the retail investor is what's interesting.
Rupert, I'm going to just look at Europe a bit. You've followed data in Europe. How explosive is the growth in the big European platforms? Just how big are these numbers?
So the UK has sailed through 2 billion, in fact more like 2.5 billion
pounds,
sterling now.
Sterling,
yeah, sorry. And we think it'll be at 5 billion by next year. Europe, not so spectacular, but growing. 350 million euros, I think, is the size now. So yeah, some way behind the US, which is kind of cruising through 10 billion.
Yeah.
But still some pretty impressive numbers.
And how fast is it growing on a month-by-month basis? And just give me a snapshot of, are some platforms doubling their numbers every few months? I mean...
Yeah, it's interesting. I mean, actually, where there was a phase in the last year where new upstart platforms were growing pretty quickly, actually in the last few months, the record breakers have been the big established guys who have reached into more creative, innovative areas to originate loans and partner with people, and actually a lot of the growth, particularly last month, was from the established big players.
Very interesting. So it's not just the insurgents who are creating the really big numbers, it's actually the established players. One of the key numbers that people are going to be looking for in this room, they're not just looking for transaction flows, they're going to be looking for return numbers. That's the important bit, isn't it? And I'll come to you in a second, David, about this. They basically want to be able to benchmark off a return. I mentioned it a bit earlier. If you're going to try and get alpha by looking at particular asset allocation to particular subsectors, you're going to want a benchmark return, aren't you? Are there benchmark returns out there? Any sense of what those benchmark returns are like? And if not, which I think maybe the answer, maybe not, are they difficult to construct, those benchmark returns?
So I guess this is where, are you asking me?
Yes.
This is where Europe and the US is quite different. In the US, there is a returns index.
And I'll talk to you about something different.
Which, yeah, exactly. Somebody else is much better positioned to talk about. Europe, it's more fragmented, whatever. There isn't a returns index yet. We're in the process of building a returns index. The beautiful thing is that it's a very simple index you can create, and it'll still be enormously useful because there isn't one as things stand. So we're looking to create a historical returns index where we will IRR the cash flows of every loan that's ever been made. We will net off defaults, net off recoveries, and produce a return for the sector. Now that will be very interesting, but really the exciting products that you can spin out of that is what will be more useful to the industry, on the basis that, as you alluded to, really it'll be bespoke versions and subsets of that industry index, which will be useful to people.
And presumably, if we've got a benchmark index, and I'll come to you in a second, David, you can start doing, derivatives and various other products off the back of it. Do you think that's where the industry maybe should be going?
Yeah, then you get into the realms of, creating synthetic products. Is that dangerous? Frankly, my crystal ball doesn't have the answers to that quite yet. But one thing we definitely think is interesting is that would it be a synthetic product, or because banks have loan inventory, is this something that, whilst they might be synthesizing it, all they're actually doing is mitigating some of the risk that exists within the bank anyway? So I think there's, if someone can produce a credible and robust number that depicts returns, I think there are all sorts of opportunities for products to be built off the back of it.
David, that's sort of you have actually got in Orchard a returns index. Is it difficult to construct? And what's it telling us at the moment? Are those returns going up or down?
So the returns are actually very consistent. We launched the UX Consumer Peer-to-Peer Index on Orchard about 6 months ago. What we're looking at is what the investor experience is if you were to invest in a dollar-weighted basket of US peer-to-peer loans and kept consistently reinvesting your returns, what yield would you have as an investor, net of losses, net of service fees, net of collections fees, anything like that. It's yielding around 10% annualized right now. And we've
going up,
seen
going
it
down?
Very, very stable.
Right. And you're netting off defaults and all that kind of stuff?
We're netting out defaults, and it's actually a very good testament to the underwriting on these platforms, because as they've grown, they haven't grown into bad. They've continued to be good, and their vintages, as Matt showed before in his keynote, he showed a graph, the vintages are actually getting better and better, which is a very hard thing to do in lending, and a testament to the way these major platforms, the pioneers in this sector, have thought about their underwriting and how they need to maintain good quality for the benefit of the industry.
And are you seeing individual loans when you calculate that composite index, that benchmark index, to get that granularity? Talk people through, because they'll probably want to know if they're an investor in the room and they're going to start running their stuff and they're benchmarking off it. They want to know what the benchmark is effectively capturing.
That's right. So we have every single loan on the major U.S. consumer peer-to-peer platform. Consumer. That index is particularly consumer, and I think later this year, early next year, you'll see us roll out some additional indices. So
presumably small businesses at some
small
point.
Business, and then also more global ones as well.
Okay.
So we're looking, to your question on how we're actually constructing it, we have individual loan level and payment level data, and loans are eligible for addition to the index once they've reached 6 months on books. So you don't want to put loans in who have only had the chance to pay interest payments and haven't gotten seasoned enough that you would have credit losses. So we are lagging the index a bit.
And has any work been done because a loss is an interesting concept. How do you define a loss? Is it complete capital failure? Is it falling in arrears? Is lots of definitions lurking around here about what a loss is. How are you defining losses?
Well, so the nature of an amortizing term loan is that depending on the time during your tenure of the loan that you go bad or stop making payments, you actually lose a different ratio of your initial principal. So let's say you have a $10,000 loan. If you stop making payments at month 4 versus you stop making payments at month 30, you'll have a very different type of realized loss for the investor. So that's all taken into account in the way we calculate losses.
And your blended return. Last two questions to Alex and Richard. One of the other areas where you might really be interested in data, I imagine, is looking at how people use websites. So it's how you use products, yeah? Because actually a lot of the investors there would like to know if they've been hearing that, there's a difference in Atlanta and Minneapolis, kind of that granularity. They probably want to know what's happening on platform. Is there platform data out there where you can begin to, chart down into the actual websites themselves, see how people are doing, how they're reacting to stuff? Where's that going? That's probably big data, isn't it, really?
Well, it definitely is big data, and I think there are platforms out there who want to see themselves in the context of the entire crowdfunding industry. I mean, and that goes beyond and above, lending platforms and things like that. And it is about consumer behavior. It's about history of consumer behavior and about how long they've been involved with the network, what kind of blog entries they've read in the past, what kind of things they're interested in. It's understanding just at large and on a summary level how the marketing programs are working, how well both on and off platform, as well as understanding just behavior at large of the consumer, and publishing that data out both to the investor and to platforms themselves, I think is...
And is that happening?
Well, we're working on it.
Okay, good. On its way. One last question from you, Richard. We talked a bit about returns data for the US. It's out there. It's probably coming in, almost certainly coming in Europe. Any sense of global returns and we're looking at global transaction flows, any sense in which an institutional investor could say, I'll get X% in Australia, X plus 22% in China, X% in continental Europe? Are we any closer to that data?
Short answer is no. There's not any global source for making those comparisons, and we're still working on aggregating a database to answer a lot of those questions. Just like to answer the China question, the annual return in the peer lending is about 12% right now. So they're relatively normalized to other markets. One of the challenges, though, in the Chinese market specifically is that between 1% and 2% of all platforms go bankrupt every month.
Every month?
Every month. So to call it frothy would be an understatement. So the risk of losing is quite high. So
there's a platform risk and then there's a borrower risk.
There's a risk, yes.
Excellent.
There's both types of risk.
Marvelous. I can't see the regulators loving that particular one. Thank you very much, and we're going to have our put your hands together for this panel. We're going to have our last session looking at venture capital. Thank you very much.